That's an excellent question, and unfortunately, a lot of homeowners are in trouble right now. You know, the foreclosure rate is up as high as it's been in years. A lot of people are losing their homes. It's a very, very serious question right now. How they got into it. A few years ago, going back 3-4 years ago, even as early as 2 years ago, a lot of lenders were looking at profiles and they were guaranteeing these loans. They were agreeing to fund an individual whose credit scores may have been below that 620 mark, who may have had 2%, 3% down payment instead of 10% or 20%. The banks were very lenient in funding folks who may not have been that qualified. Okay? So what's happening is people who, you know, the American dream is I really want to own a home. Just about every American wants to own a home. So people will do by any means necessary to own a home. And if banks are saying, okay, we'll fund this person, then people are taking advantage of that. So I'm not blaming it on the lenders solely. It's a combination of the lenders and people who really weren't qualified, who really wanted to own property, to be a homeowner. So they came in and they might have bit the story and said, well, I can afford this. Some banks were saying, okay, we'll give you a loan based on a stated income product. Some individuals might have been stating more than what they made on the application. Banks took that and they processed the loan and said, okay, now again, let's look at the four legs to the table. In this case, maybe they didn't have the credit score, but they had X amount of money. Or maybe they didn't have the money, but they had, let's say they had the equity. Okay, so you have to kind of look at what the situation was. In most cases, a few years ago, you didn't need to have the four legs. The four legs did not need to be solid. So the banks were lending out on a solid two legs. And whatever those two legs were, whether it was the assets and the credit or vice versa, the bottom line is the banks lent out, and these people in the long run really weren't that qualified. Now, there was a product that they lent out on. The product was something called a 228. 228 is your loan is fixed for 2 years, and then after that second year, it can adjust in the next 28 years. Now, there's caps on there. They're typically a 6% cap, which says if your loan starts at 9%, it can't go any higher than 15% for the life of the loan. But what happens is when somebody's not fully qualified, a lot of what we call BC lenders, and BC lenders are lenders where they're lending out to people whose credit is not that great. So it's not an A lender. An A lender is going to ask for all the proper qualifications. They're going to ask for make sure your credit scores are over 620. They're going to make sure you have your 10 to 20% down. They're going to make sure you can verify everything. But what the BC lenders were doing, what's called the subprime lenders, what they were doing was saying, you know what we're going to do? We're going to put you in a product called a 228, fixed for 2 years, can adjust after that. And those 2 years will give you time to build up your credit. And then once your credit is above that 620 mark, we're going to then refinance you and put you into the prime market, into what they call the A paper, which is the best mortgage rates. But what happened, if that person wasn't that good, then 9 times out of 10, when that 2-year period comes and it's time for them to refinance, they may not be better off. And so that's what sort of happened in this time. So now the economy has begun to slow down. We're in the war. I'm not going to touch too much on that, but a lot of our dollars are being spent elsewhere in this country. And now the economy is coming up a little shaky and slow. You know, the job market is soft. We're losing jobs. Gas prices are up. People aren't buying. People are losing their jobs. So everything is now changing. And on top of that, the 2-year period for these adjustable mortgages, subprime mortgages that were guaranteed then are now up. That 2-year period is now up. So now it's like, what do I do? Most of those banks went out of business. Over the last 2 years, 276 banks have gone out of business. So now there's this shakeup in the mortgage industry. Now there's only a handful of banks doing mortgages. Those handful of banks have now cut back their policies. They're not catering to the subprime people anymore. they're not lending out at 5% down or 2% down, 3% down like they did 2 years ago. So now that person who was shaky coming in from the start is really in trouble. That's the person that's going into foreclosure today. On top of that, because of a slow economy, houses aren't selling the way they used to sell. So now the home values are going down because when a house does sell, instead of it selling for what it did 2 years ago, the house market was going like this. It was going straight up, straight through the roof. A small house of 2,000 square feet was appraising for $700,000, $800,000 in some cases, particularly in Westchester County. Now with the soft market, that house has dropped $150,000 in value. So now what we're coming up against now is people trying to refinance their house. They think they have that equity that we talked about, that 20% equity in their house, but because the values have dropped, they don't have the equity that they once had. So this is, it kind of adds up to this big problem that we have. So I have folks today who I try to refinance, and if there's no equity in the house, they can't even refinance because you need to pay for the closing costs. Typically closing costs come from the equity in the house. And again, the new bank wants to see at least 20% equity in the house before you even refinance. So, that's where we're coming into a lot of issues with home values, and we just have to continue to find ways to kind of work ourselves out of it. Well, the best way to reach me is via phone. The name of my company is Premier Capital Mortgage. Our phone number is 914-681-0018, as well as my website, PremierCapitalMortgageLLC.com. That's www.PremierCapitalMortgageLLC.com.